Hi there, my name's Thorfinn Armstrong. I'm an R&D consultant with Easy R&D, and I wanted to come back to you on the questions that you posted. Thanks very much for putting those up there, and there were quite a few parts to it, so I just wanted to come back on each one of those in turn. So forgive the slightly long response, but I just wanted to cover them all off. So to get straight into it, you asked about RDA. Is it still a thing for buildings? The answer to that is yes, it's still available for buildings and structures when they're used for qualifying R&D activities. That means if the facility is constructed specifically for research purposes, it should be eligible for the 100% capital allowance deduction. However, if only a portion of the building is being used for R&D, then the RDA can only be claimed on the part that is being used for research. The remaining portion wouldn't qualify for RDA, but it might still be eligible for other types of capital allowances or structural buildings allowance. So that's worth a look as well. Your next question was, if you put up a beef cattle building for research and in 5 years' time the trial's over and you use it for production, is there a clawback? Answer to that one is generally no. If after 5 years you transition the building from research to production use, you generally can't claw back the RDAs previously claimed, but it's advisable to document the initial purpose of the facility quite clearly should there be any lookbacks. Third part of your question, is the whole building claimable or just the experimental bits? That one we're going to need a bit more detail on. So to determine what can be claimed for tax purposes, we'd need details about the whole system. So depending on what that information is, different capital allowances might apply. You could potentially claim the entire system if the slurry tank, along with any unique features or layout, is part of an R&D project or activity, which is designed to improve or create new processes, systems, technologies, then you could potentially claim the entire system. If you've got experimental elements such as new layout or features that again are directly involved in the R&D, this might qualify for RDAs. Whereas routine elements like a basic slurry tank might not qualify for RDA unless they're essential to the overall R&D system. So yeah, again, going to need a bit more information on that, so please do write back on that one. Next part of your question, if you're selling beef cattle during the trial, does this negate R&D tax credits? Short answer to that is no. Generating revenue from selling cattle during the research phase doesn't necessarily disqualify you from the R&D scheme, but it's important that the primary focus of the work remains research driven, therefore aligning with HMRC's qualifying criteria. Again, need a bit more info on that one to fully answer that question, so it depends on what that work is. Finally, is the building exempt from rates during the trial period as per standard? Exemptions. Agricultural buildings are generally exempt from business rates. If your research facility qualifies under agricultural use during the trial period, this exemption should apply. This is better to confirm with the Valuation Office Agency though. Again, if you've got specific questions on that or any of it, please do come back to me. I'm happy to have an offline meeting or an online meeting, respond here, or go to a private message, whatever suits you best. Please do get back in touch. Thank you.